The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to start the week, the end of the week, looking at a chart from our friend Kevin Murphy. As you recall, Kevin was a student of Bill Ehrman and Ehrmanometry. I just wanted to send this to you because he sent it to us once before that I posted, and I just wanted to bring you up to date. As you can see, he was looking for the top between July 31st and August the 3rd, and here we are on August the 4th. What's interesting today is that we had a very good jobs number. We were looking at 187. It came out at 209. Ordinarily, the markets would be screaming, but they've already been screaming, folks. So whether they've discounted all the news or not, remains to be seen. But we need to keep a close eye on that for sure, because if a market does not respond to good news, it only has one place to go, and that's to the downside. The next one we want to review is from our good friend across the pond here. This is the E-mini S&P, looking at it from a much different time frame, looking at just the geometry of the market. You'll notice here that we've completed all of these ABCD patterns that we've seen since 2009. And so that'll be another interesting to look at. And then finally, we want to look at the Dow Jones Industrial Average. And what we'll do is we'll add the Bradley model on that. And as you can see, we're in this zone here. Remember, we have a lunar eclipse and full moon on Monday. So we're in the zone now for that to occur because we got the two holidays coming in. Well, they're not holidays, weekend days, Saturday and Sunday. So we're expecting a lot of things happening, come Monday. And that's followed by the solar eclipse, which will be on the 21st, that Norm Winsky showed us splits the actual U.S. right in half as it goes from South Carolina all the way up into Oregon. And that'll be during market hours, too. The chart here of the Dow Jones Industrial Average is very interesting, folks, because if you consider the stock of Boeing Airlines, and then you added to that McDonald's, and what was the other one? There was Boeing Airlines, McDonald, and maybe it was Apple. No, it wasn't Apple. Anyway, if you took those three stocks, that accounted for 75% of the gain that we've made since March 31st in three stocks. That's not a broad market, folks. So whether that means anything on a longer-term basis, we'll have to be able to see. Mike is asking whether wheat is ready to turn or not in beans, folks. We'll cover that it is Apple. Yes, it was Apple, McDonald's, and Boeing accounted for almost all of that gain from March 1st. So we'll see if that is going to be the case. Now, folks, remember, we have this big full moon coming here. Let's just start out here with the wheat first. We have the big full moon coming with the lunar eclipse coming on Monday. We're down into this zone here where the wheat is right at the number pretty much. We're looking at 485. The last time I saw it this morning, it was 487. So that's in the wheelhouse. You can certainly say this market is oversold because we've come from 491 down to 484 in a very, very short distance. So we're due for a rally. How much of a rally we get, I don't know, but this will be a big event because eclipses have, greater power for some reason. Mainly, I don't know the answer to it, but the ancients looked at eclipses. Well, they were really into that stuff. You can see it in the Egyptian pyramids and all kinds of ancient hieroglyphs because they really watched the eclipses quite a bit. Okay, now the beans are at the same level. If you remember the beans, we were looking at the beans to come down to the 960 level. They're trading just a tad above that right now. So this is the time if you want to be interested in getting into the grains. This is where I would suggest you take a look at it, at least from a perspective of an oversold situation, and we should get a pretty good rally off of this. How much, we'll have to let the marketing gods decide, but that's pretty much what we're interested in. All right, let's take a quick look. One of our listeners has asked about the natural gas, and I wanted to bring this up to show you what happened after we had that head and shoulders pattern. As you can see, the market made the head and shoulders pattern at 278, and you can see the ABCD pattern stopped right at the 382 level at 285, and then right after that, it gave up the ghost, breaking down. Just remember, folks, when you see these gaps like we had in the natural gas back on the 28th of July, that's telling you that there's a lot of market weakness. And we did get a nice rally that lasted 3 days, and then down she goes. So someday that'll happen in stocks, but whether it'll be in my lifetime, we'll be able to see this. Okay, let's just move on to the next one here that I wanted to cover, and then we'll get into some of these. Oh, here's one that's very interesting. There's the soybeans. Let's just get this back up. We'll put this up. And hold on one second, and we will get this up right here, and then we'll take a look at it. There we are. You can see the big ABCD pattern. You can see the long-term 61% retracement in the beans here at 960. And the question is when does the when does the full moon and lunar eclipse kick in, but will it kick in? Because sometimes these things don't work, folks. You remember, it's not 100%. And that's the bottom line that we're watching here. So even though we're at these levels, that doesn't mean they're going to hold. So make sure that you use, some stop protection when you're doing these, because sometimes they work, sometimes they don't, and that's the key to looking at these markets for sure. The big surprise this morning, if nothing else, was the activity, in the bond market, because we had a pretty big move in the bonds. I just wanted to show you what happened, overnight, because we were talking about this in the room yesterday. Hold on just a second here. I got a slight technical problem, and then we'll be ready to go. There we go. Put this up. You can see there's the ABCD pattern in the Treasury bonds. The actual note contract went right back and tested that 61% retracement. It took out the previous high. That took out the previous high by one tick, and then sort of reversed. This is giving more impetus that the possibility of the market reacting from here is going to be very interesting, where I think interest rates will still be going higher, and we'll be looking at lower bonds and lower note prices. But we've already dropped more than one handle in the bond, well, actually 1.5 handles in the bonds this morning, and that's not a good sign if you're bullish the bonds. That's a key thing to keep a very close eye on. Okay, we'll take a break. We'll be right back after these few words.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're going to take a look now at the Dow Jones E-mini. The reason why I'm putting this up is that yesterday the Dow closed into new high ground, making a new high. However, the Dow E-mini did not make a new high until really about 4 or 5 hours later in the aftermarket. As you can see, it's made some pretty big expansions up here. The key to watch here, folks, is the Dow Jones has been up 8 days in a row. That's an outlier event. We don't see that very often. And here it's coming in 8 days up into a full moon and lunar eclipse. My goodness, that's Mother God and country stuff. So whether it works or not, but this is the type of thing that you want to keep an eye on. Remember, we had Norm Winsky on yesterday, and he spent a good half hour talking about all the important things that are coming here in August, including the first eclipse, which will be Monday, and then the solar eclipse, which will be on the 21st. So we'll watch this as we go through. But just on a statistical basis, it would be very dangerous to buy stocks here. That don't mean that they can't go up, 10 days, 12 days, 15 days. I don't know. All I know is if the market's up 8 days in a row, the probability of it turning down is better than 80%. So those are the things that I think are relatively important to keep in mind, just from a statistical, background. When you look at the other charts and you look at the Bradley model and some of these geometric things, it's pretty interesting. And the other thing is the volatility index is still, probing for a bottom down in here. And again, Bloomberg had some special fellow from hedge funds on yesterday who was selling volatility, and he believes that the VIX is going to go down to 5. But whether it does or not, we will have to wait and see if that is going to be the case. Okay, now let's move on. We had another question from one of our listeners. by email, and I wanted to bring that up to you. And that is hold on, we'll get it up here. Okay, here's what I wanted to mention. I showed you the previous chart where it made new highs. Here's where it was after the close. After the close, I don't know, something made it very bullish. I don't remember what it was, but it didn't even make new highs until much later at night. So, this was a very big divergence at the time, but later on that divergence, broke down and the market continued to go higher. But at that time, it was rather an important thing, to keep an eye on. So since we're over this time here, I wanted to mention to you how the soybean meal looks compared to the other. Now, this is, just one second here. You'll notice here that this is the chart of Christmas meal, December. You'll see the ABCD Gartley pattern that completed yesterday. We're right down near we're not too far from a 78% level in the meal. Whether it gets there or not, I don't know. But you'll notice the double bottom that we had back on the new moon of June 23rd was spot on. So this is interesting here that we're coming in to another full moon with the lunar eclipse. And the lunar cycles work very well for the grain complex, folks. Those are the ones that it works on other things too, but the grains are probably the best, the best of anything that I've seen anyway, as far as looking at some of these things that we're going. Now we're having a correction today in the euro, and I wanted to bring it up to you to show you where we are on a short-term basis. Looking at a half-hour chart over this whole week here, you'll notice that we have a potential to complete an ABCD pattern down here at the 118.15 level. Whether it's going to complete that or not, remains to be seen, but it's right at that level that is going to be important, because if we go below 118, that's going to be almost like a weekly reversal, because we had a high of 119.10, and if we go below 118, that would tell us that we're most probably looking at some type of a potential reversal in that euro. In fact, if it did that, but it still has to do it in order to see if we can, if this can be done or not. But right now we're holding at this 118.37 level. And we'll soon find out if this is going to be something that will be very, very important to the markets, because that 118 level, closing below that, would look like something like a weekly reversal, when you made a higher high and then closed lower for the week. Now, if that's going to happen, it's got to do it late in the day. Well, it could do it early in the day, but it's got to close there. That's the key. And that's another one that looks extremely interesting, from a technical perspective, is watching, the currencies is one of the things that we really like to look at. Remember the British pound, we hit a double ABCD pattern up at the 132, at 132.50. The high was 132.65. It broke $1,000 over 160 pips, and it hasn't even made a 382 rally off of that, folks. So that's another sign that it's really interesting. Yes, the bull market could last forever. Absolutely. I believe that with all of my heart, and I still have 2 shares of the Brooklyn Bridge available for anybody who would like to buy them. They're a nickel a piece. And we'll see if I have any takers on that. When you start seeing like this forever, forever or cannot lose, be really careful of that, folks, because there's nothing new under the sun in these markets. Honest to goodness. I mean, it does the same thing over and over again. Remember in October of 2008, our good friend Helicopter Ben was out telling us how rosy things looked, and he couldn't see anything in the horizon that would cause the market to sell off very much. Well, it sold off just a bit. But anyway, everybody's wrong, and that's why they have this book, the experts speak. Everybody has an opinion, and sometimes they're wrong. You're the one that has to decide whether you're going to, make the trade, and if you're going to do it at all. That's the real key to looking at. But this market has has had a lot of people following it. You remember we looked at that advanced decline, the advanced new highs to new lows from our good friend Arch Crawford. I'll put this up again because the same thing happened again yesterday. We had a declining new highs, but the interesting chart that I find very interesting and something that we happen to be short is the Russell 2000. And if we put that chart up, you can see a market that has topped well over a week ago up at the 144 level, and it's already now trading in the 139. So this is going to be a very market to last. Yes, this could last into the afterlife and the world to come. You're absolutely correct. Well, I didn't know about Bitcoin has dropped 57%. Well, we'll see, and we could see Dow 50,000. Here we come. That's the bottom line. What we're watching. When we come back, I want to go over the charts of Apple and Facebook one more time, just to get a clear picture of what we see technical in some of these things, and we'll work from there. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. Well, the market is opening. So far, it's a bit uneventful, but that'll change in the next 2 or 3 seconds. We've had a little bit of a bounce here in the dollar yen. It's moved about 80 pips to the upside right after the euro made its high at 118.90, and we'll watch to see how it unfolds, for today. That's the 2 cents worth that we're watching here, looking at these things. So we'll keep a close eye on these grains because, we do have this lunar eclipse and a full moon coming in, so it's going to be very, very interesting to see if it can hold these levels for today. Alrighty, now we've talked a little bit about the bonds, and I wanted to bring up the interesting chart that finished yesterday that basically verifies what we were looking at in the notes and the bond contracts for futures. This is the TBT, which is the ETF for the bonds. And if you'll notice, we made a Gartley yesterday, and that's a very important point because we've had some strength today in the interest rates dropping, and that means bonds have dropped. That means the TBT should start to rally. We did make the big ABCD pattern and the 3 drive pattern finishing back on the 26th of June. And so what we're looking at now is to see whether the market can continue, and this would set up an ABCD structure that would take it up to about 39, which is a better than 10% move if it, in fact, it will do that. That's the $64 question, is if, but there's always that possibility, as we look at these things this morning, that it's very, being a Friday on Jobs Day, folks, that's always a challenge because, the people look at these numbers like they come from God herself. And they change them all the time. That's the $64 question that you see that all the time. Now, I do want to go in and take a look at Apple one more time. We looked at it when it made its high the other day. We'll put this up so we can look at it here. You notice that, one second here. There we go. Let's go here and we'll pull this up. You'll see that Apple made a 1.27 expansion up there, right spot on at 160. That was also an ABCD. We've got a gap down there at the 153 level. So there's a potential that this has a pretty big pattern to maybe get a little bit more of a correction, if nothing else. Now, if we take the really long-term view on Apple, we showed this just the other day. This is from our good friend Jim Bartolioni. And if you'll notice, this is the 3 drive pattern that we're seeing on the Apple. And that's since it came out as an IPO back in 1984 at the exorbitant price of $10 a share. And that's not including all the splits. And we had 7-for-1 was the last split. So this has been one heck of a move. And there's a possibility that is completing that big 1, 2, 3 pattern and Apple on a very, very long-term, monthly chart. So this is another one. Now we want to take another look at Facebook because we're seeing some similar things happening in Facebook, but on a little bit different basis. This basically shows Facebook and how it's been hugging the top of this ascending line for such a long time, and we just hit the top of that line, one more time. So if you'll notice that when this came out as an IPO way back in 2004, when was that? Yeah, no, that was 2012. It dropped 60% from its IPO price, and it gave a beautiful buy signal down at where you see the 29.81% level. That was the really easy part to get in. That was when it was around 22, and of course from 22 it's gone to 170. So those are very interesting charts from a longer term perspective. So you don't always see that, but that's what we're looking at right now, folks. When we look at these patterns and stuff, these are all based on probability, folks. They're all probability based. There's nothing here that is etched in stone where you have to be, a buyer or seller at any particular time or not. You're looking at a place where you can identify a spot where you can put a trade on and control the risk. Because when you're putting a trade on, the only thing you can do is to control the risk-reward situation. That's all you can do. There's nothing else that you have control over. You never know how much money you're going to make on a trade, and you never know whether the trade is going to be a winner or loser. The only thing you can focus on is how much you have at risk. And that's the key to trading. It's not how much money you make, it's how much money you don't lose. Because eventually you're going to catch some of these and they're going to look really good. But, you got to kiss a few frogs before you get the princess, fellas. That's just the bottom line. So remember, it's all about risk control. And if you can control your risk, you're going to get to the promised land, without too much trouble, in my opinion. But, not all the time. It's going to be a little difficult sometimes because, you're going to have people throwing you a lot of misinformation. And that's one thing about being a technician. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's just the bottom line of what we're watching. So that's the key to looking at some of these things. So pay attention to that. And I think it'll help you quite a bit. It's the amount of money that you have at risk, not how much you're going to make on the trade, but how much you're going to be winning or losing at any particular time. So these are the factors that I think will be that'll be very, very important to us, in the long-term perspective. Someone's asked a question about the bonds. Folks, the bonds look very clear. They've just completed another ABCD pattern yesterday. They've broken down about 1.5 points. Notes have done pretty much the same thing. They retested the 61% retracement. So all that, I think, is what is very, very important, and the thing that I think would be the most important. We're having a nice rally in stocks right now. The NASDAQ is up on the day. The Dow, of course, is still rising, as always, and we'll see how much power they have as they come into these other levels this morning as we look at some of these other things that are occurring. That's the main thing that we want to be watching. So, okay, hold on here a second. All righty. All right, I just wanted to make sure that my beeper went off to tell me that the euro is still in this zone of 118.40. We're looking at 118.10 is the really important part here in the euro, folks. If we get below 118.10, it'll be below the 78% level. It'll also be an area where you'll be watching some real serious support level being broke at that 78% level, on the hourly chart. So, but this is early in the day, and anything can happen, and it usually does. So, just keep a close eye on some of these prices that we're looking at, because those are the main thing. If you had to focus on any one thing today, folks, it would be the probability of the market being up 9 days in a row in the Dow. The fact that we're looking at all these astro things coming in today might not happen today, it might not happen Monday, it might never happen. But it's just a probability. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
We're back, folks, and we want to watch the Treasury notes in here. I've just posted the chart of the Treasury notes, and I'd like for you to take a very quick look at this. Because the reason is the fact that we're looking at a market that has a potential head and shoulders pattern also with the high that we made yesterday by one tick. That matches the high that we made back several months ago. And you can see the head and shoulders pattern very quickly. In order to prove this to yourself, take a blank chart out, draw the lines and see, the distance between the shoulder and the head and the shoulder. And you'll see they come in at the same price and time. And that does complete a head and shoulders pattern in the Treasury notes. And of course, they're backing off a lot. So that's telling you that you're most probably, a little bit close to being correct. Now, we're having a pretty good rally so far early this morning in stocks. How much it's going to continue or not, I don't know. As I mentioned before, we're right at that situation where we're looking at an outlier event where we've had so many other things. One other thing happened during the break, folks, whether it's important or not, I'm not sure, but we just made a new low on gold by just about 20 cents, and that low was an exact 78% retracement of the low we made just the other day. So that's a key level, to really to keep an eye on, because that's something that's mother, God, and country stuff. So watch that very, very closely. That's the key to watching the gold market, because you don't have to risk a lot right here. It's trading at 1267.50, and if it drops $3 from there, you'd certainly you'd want to be out of that because it wouldn't have anything in your favor. But it did hit the 1266 level, just absolutely spot on. And there must not have been many stops or anything there, because the market literally stopped right at that point, and we'll see what goes on from that level. Now, if we take a quick look here, you can see the Dow is up, looks like about 40 or 50 points. The NASDAQ is up 15. The S&P is up about 5. And whether some of these things unfold like this, we'll have to wait and see, how it all finishes up, on the day, because it's still early. But remember, this is an outlier event in the Dow Jones that we're seeing here, folks. Just to prove it to yourself, just go back and see how many times the Dow has been up 8 days in a row in the past for a correction. That just does not happen very much, and we'll see. Now we have the lunar things coming here. We're in the zone now. We got the lunar eclipse and new moon coming in on Monday, so we should have some, really good volatility because, we're not seeing volatility right now. The VIX is still near the lows. No one thinks it can turn from here, but if you take a look at the long-term Bradley model and look at the pattern that we're watching here, this is something that I think is, rather important. And remember, it doesn't necessarily have to stop at 8 days up, folks. The Dow could go as many as 10 days. Does anybody want to guess the number in the commodity market, the number of days up in a row in the commodity market? It's held by one commodity that did it twice and one commodity that did it once. If you'll tell me what the answer to that is, you'll win a free trip to Tucson, Arizona, at the most influential resort that we have. And it wasn't gold. No, it wasn't gold. It was silver and sugar, 22 days in a row. And those are the records that I have. Maybe they've been broken by somebody else's data, but that's what we have. But gold did it. Gold never made the 22 days in a row. Silver did, because silver was in they were trying to manipulate silver back in 1980, so it was a different thing. Of those 22 days, I think 16 of them were limit up, but they didn't change the limits like they do now. In fact, they don't even have limits now. They expand them so much that people are able to get out easily with some of the things, that they're trading here, so you don't get trapped in things, which is, limits are really silly anyway, because the markets are going to go where they're supposed to go anyway, no question about that. So, but we are starting the day out relatively strong here in these markets, so this will be the $64 question of whether we continue this direction at all. The euro is getting down here, almost ready to break out the lows here, and we'll see if going on. Yes, the DAX is very, very close to bottoming. We posted that ABCD pattern several times, but remember, the DAX is not the Dow Jones, folks. One could be topping, the other could be bottoming. So keep that in your ballpark for remembering it. And that doesn't mean that it's just because Germany is bottoming, we could be topping. Treat each one separately. If I've learned anything in these markets, is if you look at each one separately, you can control your risk. And intermarket relationships, even though they do exist, change very, very quickly. I mean, let's ask yourself the question. 4 weeks ago, the DAX was topping and the Dow was still going up. And if you were long the DAX from 4 weeks ago, you thought you'd made a lot of money if you were looking at the Dow, and not happening. So you got to look at each one separately. The fundamentals are different between 1 and 11. That's it. Here's 1897. I wasn't even trading then. I didn't start trading till 1902. Holy cow. That's when they were trading under the buttonwood tree, probably. But thanks a lot for the information, Steve. That's a very, 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 very interesting one. But this just shows you that it is an outlier event. That's the bottom line of what we're watching. Now the euro has broken down here. We're getting down almost to the level here at the 118. The 118.14 area is the 78% retracement of this last move. So that's why that 118 level is so very, very important, as we watch this. Now, gold has just broken through to the downside on the 61 or the 78% retracement. So that's no longer an issue. That is in the history books. If you would have bought that, you certainly would be out of it. Because once it breaks those numbers, you just got to stand aside, because there's just no way that you can possibly stand in front of it as you look at some of these things. But the euro is spot on. The chart that I posted there a little while ago, we're sitting there just like we were in the gold. And this is where, if it breaks below this 118 level, folks, that means that there's a potential big move coming in the euro. Remember, we're up about 10, 11 days in a row. So that's another key figure, to watch. That's basically, what we're looking at here. So it's just early in the day yet, but we've hit some pretty key levels that are failing now in the gold market. The bonds have already failed. Stocks are, they're just bouncing around doing nothing. We've had very little range so far, with the NASDAQ still up. The Dow is still up and the S&P is still up, but not a lot, but they're still up. So that doesn't mean that they can't go up 10, 11, 12, 13 days. Just be really careful here because we have this lunar eclipse and we have this full moon coming in on Monday. And, Friday's the day you want to be doing your trade. So watch it very, very closely. That's the bottom line that I'm watching here this morning. As far as crude oil, we still hit we're in a downtrend. There's no question about that because we hit the exact fib number at that 49.96. We hit it twice yesterday, and then it's backed off quite a bit, well over 1.5 points. And our rally back has been a meager few points. So the key here is we're breaking down really badly in gold. Someone's asked a question of would I reverse there in the gold market. Folks, I don't do reversals very much, but I certainly wouldn't be long the gold now. It's really given up the ghost. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We've broken below the 118 level now in the euro. That's near those lows that we made early in the week. Then we rallied up to 119.10. We've given all that back in 2 days. The bonds continue to go lower. Gold is now $4 below the 78% retracement. So we're seeing reversals in some of these markets that look quite interesting, but it's still a little bit early. Just to review What I think is the most important thing to remember is that we have this outlier event here in the Dow Jones today, and markets, they don't always go up, but this one is going up. But remember, 3 of those stocks, McDonald's, Boeing, and Apple, has been most of the move since March. So there's a big divergence here. We're seeing that divergence, of course, in the Russell index, but it's still a little bit early. We're going to see some really big volatility in these coming weeks, folks. The $64 question is to see if it's going to be moving up there. Steve, you have data going back that far. Very good. That's interesting that Steve Rhodes is posting some really incredible data. By the way, folks, Basil Chapman is doing a webinar series. If you do nothing else for yourself, you ought to do that. It's a cost of a couple of meals out. And he's got some of the greatest information you're going to see on sector rotations and stuff, that if you have any ETFs or 401ks or retirement stuff, you ought to take a look at what Basil has there, because he's really got some super things to look at. But it's great information and always very, very timely. Remember that we've hit most of our objectives. Well, we've hit all of our objectives in the stock indices, and the key now is to wait till Monday on these grains to see if we get some influence by the lunar eclipse and new moon, full moon, the lunar eclipse and full moon that occurs on August the 7th. That's another one to watch. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.